trust no one. That's the advice I have for you if you're in today's markets, because frankly, guys, this is a wild and crazy time. I don't know if I've seen something like this before. It's nuts. Let's just jump in and I'll tell you what I mean. So take a look at the headline here. 2-year Treasury yield posts biggest 3-day decline since the aftermath of the 1987 stock crash. And the basic gist is that people are like, you know what? I want to retreat to safety. Give me those treasuries. That's what I want. And everyone piled into it. Hence, the yields went down. And this is a massive swing because, again, this is biggest since 1987. I was looking at the yields here. So we got 2 years at 4%, 10 years at 3.54. And I remember it was just the other day we were talking about the treasury that the 10 being like 4% in that range. And then we have the 6-month and the 12-month around 4.17 and 4.63. I think we were talking like in the 5% before. It is a massive swing. So basically, people are moving around, and that's why you see yields jump, because essentially demand for bonds goes up, yields goes down, essentially. The other thing is, too, is take a look at this. This is the sector performance. It is mixed. Financials were down big, but other things were up. So this is actually quite interesting. If you followed the markets, and that's why I said is trust no one. I was watching it when it first opened, and like everything was red, then everything went green, then it went mixed, and it's like I don't think the market knows what it wants to do. Trust no one. That's my theme of the day. If you were brave and you're like, you know what, I'm gonna buy the dip in banks. I had a few people in comments saying they bought SVB, but now it's frozen. Not so great. I think some of these things, if you buy bank stocks, you're probably gonna get wiped out. Just to be honest. Other ones, you might be okay. And this is where it's like trust no one, because you manage your risk. That's the best way and best advice I have. And it's funny because this is how it is. Whenever you look back in history, you're like, oh yeah, I totally would have bought the bottom because I'm so smart. I totally would have bought the bottom. It was so easy to tell. But dude, when it's happening, when you're watching everything crashing and like all the news is really negative and some of the stuff is not coming back, it is really a risk. And also too, it involves a bit of luck. So I'm just telling you the truth of it. So some of these things could have been great buys for some people, but it's not that easy. And that's just sort of why I want you to think about, like, when you look back at the history of charts, it seems like it's easy, but it's not. And the other thing is too, when you ever look back in history, the things that you see today are usually the survivors. Oftentimes what people ignore are all the things that failed, right? So, years from now, we'll probably forget about some of these banks existed even, or your dog coins and stuff like that. If you're interested in this stuff though, this is a key chart. I'll throw it up on the screen. I've showed it to you guys before, because again, I've seen some comments talking about the 250K, and that's a big one. 250K, we're talking about the FDIC, and this basically when you're looking at banks, what percentage of their deposits are essentially insured versus uninsured. Now, on the chart, you guys can see it for yourself. So a Silicon Valley Bank is highlighted, but the basic gist of it is like 97% of Silicon Valley of deposits were uninsured, right? They went over the amount that was insured by the government. Whereas if you take a look at the chart, you can see it for yourself. It's all over the map where banks are. So like on this chart, the highest one is 64% are insured. And then like some of the lower ones, like say like a bigger bank, like say Huntington, maybe 41% are insured, or like a U.S. Bank or 37%. It's going to be all over the map. JP Morgan Bank, 32% of their deposits are insured. Now, it was interesting because the KPMG, who is supposed to audit these things, right? I guess you can read the headlines. It says KPMG gave SBV and Silicon Valley Clean, 600 Bank clean bill of health weeks before the collapse. That's sort of where I'm like, trust no one. I mean, it's not great, right? It's not great if these banks are being audited and then like just a few days later, audited and then saying, hey, everything's fine, and then a few days later they collapse. It's not a good look. And this is where I've told you guys before so many times that on Wall Street, people will lie to you for money. See the movie Wall Street. If you haven't seen it, I keep mentioning over and over again. And the same with on YouTube. All those YouTubers pumping you FTX. They'll basically lie to you for money. People will do that. Now, Charles Schwab, are they liars or not? They're saying Charles Schwab shares dropped 12%, even as firm defends financial position. So they're saying everything's fine. We're doing great. Everything's okay. Now, to be really frank, I think Charles Schwab is one of the good guys. But, this is where the trust no one thing is a good advice. So another way to think about it is, don't throw all your eggs in one basket. Don't, if you have, say, over the 250K, don't put it all in one bank. Like, get your balances down below the 250K and spread it out across banks. So it's not crazy to have more than one bank account. That is not crazy. That's actually a good thing to do. or just go with bank a mattress. It's a joke, but you guys get my point. Because for many people are like, you know what? I'm just doing bank a mattress. The FDIC planning action, planning another Silicon Valley auction. So basically, there was no buyer for this thing over the weekend. The deadline was a Sunday, 2 p.m. No buyers, and I mentioned that before. It's a bit concerning because that essentially signals to me that like they think it's just too toxic and just don't want to mess with it, or the bigger banks don't have any money. Now, in contrast, though, in the UK, I guess HSBC did in fact buy the Silicon Valley Bank like UK branch. So there were some buyers there. So we'll see if someone's buying this thing. And I mentioned before, there's a politician saying, you know, we'll take any buyer, fat buyer, short buyer, tall buyer, skinny buyer, whatever. I thought it was pretty funny. Not funny to obviously to people involved in this thing, but it is happening. This was an interesting one as well. There's been debates about what's the Fed going to do. Is this a bailout, not a bailout regarding SVB? Now, if you read the headline here, QE in another name. So new bank backstop points to the end of QT. Are we printing or not? So Citibank, they're on the sort of end of printing, or the better way to think about it is, are we adding liquidity to the system or not? So this is a problem right now. Why is it wrong? Well, there's a couple things going on. This is why the things are really hard to figure out right now, to be really frank. So if the banks are failing and we have bank run, everyone's panicking, stuff like that, we're just worried about our whole financial system. Now, if the Fed is like, you know what, we're just going to print our way out of it, we're going to bail out everybody, etc. What about the fight against inflation? That is a real concern. This is how it is. You just can't have inflation spiral out of control forever. There's just too many problems, and also, to be very frank, it also hurts the people at the bottom. The other issue we have as well is that we have arguments about whether the Fed will continue to hike rates. There are different opinions on Wall Street. The big one that I showed you guys before was Goldman's, right? Also, too, you can see headlines, wild swings in the bank stocks create opportunity for brave investors, right? Depends how brave you want to be. But then, as I mentioned before, Goldman is here. The SVB's rescue means that the Fed won't hike rates in March, says Goldman Sachs. And that's, who knows? I do agree, though, with the sense that the Fed will lose credibility if they said, you know what, we're not going to raise rates. And it sort of signals that we're not that serious about inflation. So then the market will be in a tricky spot because, like, okay, so that means that are you printing again and there's more money in the system and hence equities will go crazy? I don't know. Trust no one. If I had to bet, though, I think it would be really weird if the Fed completely reversed course, to be really frank. I think that would be really, really weird. But I just don't know, to be really frank. I don't know what the Fed's going to do. I think it would be weird personally, but Goldman is saying opposite. I've also mentioned to you guys before that, from the perspective of many of the people on Wall Street, they want you to keep, giving them their money so they can make money on, assets under management, that kind of thing, get their management fees, and they're going to tell you whatever. So again, trust no one. And I'd love to hear you guys' opinion on this one. So again, my opinion is it'd be really weird if the Fed, stops raising rates. They may not do the 50, which they were signaling before. But again, I think it'd be really weird. And tomorrow, I think, is we're getting the CPI data. So if inflation remains really, really hot, then I think they have to. It's just, oftentimes Wall Street is just kind of like, hey, Fed, help us out here, give us more liquidity, print some more money, keep the party going. I don't think so. So I think Goldman's, I don't know what they're smoking, but that's just my opinion. Love to hear you guys as well. And then this was the other one that was kind of crazy too, is Bitcoin soars a rebound from bank crisis sell-off. It may be too good to be true. So here's the deal. CZ over at Binance, he was tweeting out basically saying that, and we'll just read the tweet here. Given the changes in stablecoins and banks, Binance will convert the remaining of the $1 billion Industry Recovery Initiative Fund from B. This is the Binance USD. I think that's like their stablecoin thing, native crypto, including BTC, BNB, and Ether. So my understanding basically is that, and guys, if you're crypto people, please, chime in on this one. I'm not a crypto person. I've never been a crypto person, so I'm just telling you what I'm reading here. It sounds like to me, though, that they're just buying up a bunch of Bitcoin. And so is this a one final pump before the end? Who knows? I don't trust any of this stuff. That's my opinion. However, I do understand. I get it. If we live in a world where we think that, governments can print endless fiat and therefore your dollars, aren't really worth anything, and then hence you want to buy Bitcoin. If you're going to be in crypto, I'd say yes, be in one that they're not going to be, making any more, or in fact, be in one that they're going to be constantly burning. The problem I have with crypto always is I just don't know who owns what, and I don't know if governments will one day just ban it and these kind of things. Like, there's just too many uncertainties for me. That's just for me. And again, for any of these kind of things, be it your banks, your crypto, buying the dip, all this stuff, manage risk. It's the best advice, manage risk. And I know when you look back in history, it looks so easy that you should just YOLO on the thing that bottomed out. And then it, after 3 years, you like quadrupled your money. But when it's happening, it's really tough because you don't know. And this is, again, manage risk and trust no one. So thanks again for watching, everyone. Be careful out there, and I'll catch you in the next video.